Welcome back to the show, everybody. Check out these headlines. XRP's on the move, and it's not following anything other than itself. That's the news of the day there. Uphold, Ripple, Zum Wallet, Biden executive order, Polysign, $10 trillion market in the near term. World Economic Forum, $27 trillion. We'll tell you by when. Proud moment for Ripple, XRP market cap volume and decentralized exchange volume, massive jump. We got that, TA, and so much more. Somebody roll that beautiful intro.
Digital Perspectives with Brad Kimes. Come on in.
Welcome back to the show. You can follow us on Twitter and YouTube for exclusive content. Right now, it's $1.32 trillion market cap for cryptocurrency. Good afternoon, good morning, good evening, wherever you are. The market is off by 0.5%, but not XRP, baby. Right now, 34,300 for Bitcoin. But look, off by 0.7 in the 24-hour, off by 0.8 on the 7-day. Ethereum, 1798 now, off by almost as much, 0.6 in the 24, off by 2.3 on the 7-day. Tether market cap is 84.6 billion plus and growing. 60 cents for XRP at the number 5 spot, but we're up by 6.3 in the 24-hour, and just an hour or so ago, we were up by 9% in the 24-hour and up by 5% in the 7-day. Most of this has been in the 24-hour range here. Very exciting that XRP is moving without the dominance of Bitcoin in this day, on this day. Keep a track of that. Now let's look at the range of price between 56 and 61 cents plus. Here we see up 6.44 right now on Fiat Links. We'll keep an eye on the range. And I got some TA for you before we get out of here. This is a reminder. We covered this a couple days ago, but Tranglo, a strategic partner of Ripple, has announced a significant collaboration with Al Ansari Exchange, the largest outward personal remittance foreign exchange company in the United Arab Emirates. How about that? We love it. Then there's this. Shout out to Uphold, our partner, Zum Wallet, and shout out to Weed Say When, the XRP Labs team. It is celebrating the Uphold and Ripple announcement, so we're waiving transaction fees on Zum Wallet using Topper for 48 hours. With Topper, Zum users worldwide now have a fast, easy way to buy digital assets with a credit or debit card. If you haven't checked out Zum Wallet, this is your channel. You can click that link right there. It's on my profile on X. And here we see Ron Hammond. Shout out to him. Very quick update here on what's going on this week in Congress. With the House having Speaker, we have returned to normalcy as Congress focuses on averting another shutdown and funding for the Israel-Ukraine. It says here we are almost a year away from the 2024 election, and crypto is starting to come up. What to watch? 2024 presidential election race has been in full swing for months now, and we've already seen a few candidates make statements on crypto regulation when compared to more mainstream issues like the economy and other areas that are covered in the campaign themes. This is because crypto is more niche. It says when compared to larger topics and because the issue has garnered bipartisan support and criticism in Congress. However, the SEC and Biden administration's approach to crypto has been garnered enough pushback to make an appearance already in campaigns. Well said, Ron Hammond. It says here, ironically, it is actually the Democrats candidates in 2020 who were first to include crypto regulation in their policy platforms, as Andrew Yang did, including bipartisan Token Taxonomy Act in his policy priorities. Mike Bloomberg cited a crypto regulatory framework in his campaign. For 2024, the attention has shifted to the Republicans, and right out of the gate early, Ron DeSantis, who unveiled his national security plan last week, which included protecting innovations in the crypto space, a broad but important marker for the crypto space. You can see that post there. It says other Republican candidates are teasing or mentoring crypto tangentially in their remarks, as Vivek has teased that he will release his comprehensive crypto policy platform at a NAB summit in November. The event will also include several R&D members of Congress. Early this year, Nikki Haley discussed blockchain technology and the importance of fostering innovation in relation to concerns around China and national security. That's a very real thing, ladies and gentlemen. Senator Tim Scott has a long track record of voting pro-crypto and is the lead star in the Senate Banking Committee. We'll want to keep an eye on him. Then we have Donald Trump himself, who is in the opposite camp. He famously tweeted his hate for Bitcoin back in 2019, and also tried to push a rule in the final days of his presidency to significantly hamper self-custody. Elizabeth Warren is leading this effort currently right now. He says here, finally, there is recently declared independent candidate Robert Kennedy Jr., who's been staunchly pro-crypto in his public speeches and tweets. He has stated that he owns Bitcoin and stands for policy issues such as the right to self-custody. I'd like to interject there also, and his uncle, John F. Kennedy, is the one who wanted to strip the Fed of its power with the silver certificates and bypass the Fed. And his brother, Robert Kennedy Jr.'s father, said he was going to pick up the baton and finish what his brother had started, JFK. And now we see, fittingly enough, in a time of monetary crisis, Robert Kennedy Jr. seems to be here to pick up the baton as well. I have some great video and information inside of the Freedom Zone if you'd like to learn more on that. While there is some excitement in seeing so many candidates early in the cycle include crypto in their platform, there's also concern. Elections tend to turn policy issue hyper-partisan as each candidate tries to cast their opponent's position on a certain topic as flawed. It is very easy for common sense policy ideas to get derailed quickly into partisan mess in D.C., which is not hard to imagine. So far, crypto policy has risen largely above the politics, but is not immune to partisan swings in support. An example is the July votes on stablecoins and market structure. Understanding this dynamic, many in Congress are pushing to pass crypto legislation ASAP before the election rhetoric kicks in to a high gear in 2024, with bills touching issues like stablecoin regulation, market structure, taxes, and accounting in play. Time is short, no doubt about it. For now, it is most likely 2024 campaign debates. Talkers on crypto will be focused on the themes of fostering innovation, international competition, protecting consumers, and of course, CBDC, which Emily Parker does a great job explaining. And so do you, Ron Hammond. Shout out to you for all the information. We are grateful. And then there was this, the executive order on artificial intelligence here. We have just a summary overview, and I'm not going to go deeply into it other than to tell you it does appear that we need to find out more information here, but it is issuing a bullets points of trustworthy artificial intelligence. And as leaked, you can imagine what we really need to watch out for here is how the administration goes after controlling such things like artificial intelligence. The leak was suggested that it would be through cloud services like Google Cloud, Amazon Web Services, Microsoft Azure, and basically considering computation power a national resource. So we will keep you up to date as we learn more when all the facts come out on the AI executive order, which could include mining and computation of power if it's considered a national resource for Bitcoin and proof of work products. So we'll keep you up to date on that. Mary C. Hall here, and if you don't know, shout out to Mary. She is CBDC product marketing at Ripple. And she says here, this is a very proud moment for Ripple CBDC team and our partners. We've worked together on a proof of concept for hypothetical EHKD pilot program for HKMA, which is the Hong Kong Monetary Authority, to help realize home equity. That's what we're talking about. Yeah, and we got it right here. Shout out to Matthew Linai, Fubon, Hong Kong, and Ripple to showcase a novel home equity line of credit pilot project. This is exciting, ladies and gentlemen. This is really about working into these real-world assets, real-world situations where you can actually take out friction of the system. And this is super exciting to me. Now, I'm not going to break all of this down, but you see Ripple smack dab in the middle of every bit of it here. And we love that. Those illustrations are amazing. So I just wanted to show you that. And the participants like Toko as well as Ripple. You're going to hear from Toko in just a second. And boy, are you going to like what he's got to say. And then it's a reminder about the platform developed for Project Mbridge is underpinned by custom-built distributed ledger technology, a set of comprehensive legal rulebook documents, and a fit-for-purpose governance structure. You can find out more by clicking the thing, but we're not going to go deeply into it. There's nothing that reveals anything about Ripple or XRP in the document, to be clear, but we do know from James Wallace from Ripple that the XRP ledger in XRP is in fact at least one of the models being tested as Mbridge. So or maybe it's the only one. We don't know. But what we can say is that Ripple does work with the Hong Kong Monetary Authorities we just talked about, and the Central Bank of the United Arab Emirates, Bank of Thailand, and many others on this page here. So it is noteworthy, and we will keep an eye on that as it continues to grow. Now, we all remember the DTCC and the importance of DTCC in the digital asset ecosystem, and they had just recently purchased Securency, as we know, which Securency says here that they will be utilized on Ethereum, Stellar, Ripple, EOS, and other distributed ledgers as to help with on and off-chain movement of tokens. That is what's happening here, and that is hugely exciting. And when we hear that, you can hear the positioning from the DTCC right here.
Well, we play a very important role in the industry. We have for many of us are celebrating 40 or 50 years in providing scalable, highly performant systems, operational resilient systems, scalability for the industry. And when we think about the digital asset ecosystem and helping our clients along their digital transformation journey, that role that we play today is something that's going to be even more critical as we move forward. Clients are looking for, and regulators are looking for, organizations that can help them understand how we can still deliver upon that same value we give today, and ensure that we're not introducing new risks into the system, that we're managing the risks and controls along the way. And so that we're going to continue to play a very important role into the future.
Absolutely, and that is basically what the acquired agreement for Securency is really all about, right? To facilitate legally compliant securities offerings in the United States globally, and to help do that by DTC acquiring Securency. And obviously, it can be utilized on these distributed ledger technologies, as well as others, as it says, as well on legacy systems that currently exist as well, but allowing for seamless on-chain and off-chain movement of tokens. This is the ultimate goal where we're going, ladies and gentlemen. That is hugely exciting. And to speak to that, Coinbase talks about tokenization of U.S. Treasury to accelerate in this high-yield environment. And they go on to say here, in the current high-yield environment, tokenization is taking on a new role in digitizing financial assets like sovereign bonds, money market funds, and repurchase agreements. Oh, my goodness. Oh, boy. And so many people are excited about a bull run. I'm excited about the next bull cycle, right? You can have your 26-day pop. Well, I'm here for this. That doesn't mean I'm going to take a little cash on a bull run. Now, I'm talking shit, but I mean, I'll take a little something. You know what I mean? You get my point here. Make sure you can see the forest. And not just the trees, right? The whole forest here. There is a big agenda. And boy, Jack from Polysign is going to tell us all about it here. The CEO, Jack McDonald, shout out to him. And Ray Fuentes for a fantastic conversation right here. Take a listen to a piece of it.
On the topic of potential regulatory shifts, looking into the future, where do you see potentially the biggest opportunities, both in crypto, in blockchain, in relation to financial services?
Yeah, I've spoken about this quite a bit and spoken to Joe and others within Link2. We believe the future is all about tokenization, and that encompasses both cryptocurrencies and other types of real-world assets that will benefit from being tokenized or digitized, being created on-chain, traded on-chain, stored on-chain, et cetera. And we're seeing some continued positive signs. There was just a story a week or two ago about Larry Fink from BlackRock, again, talking about tokenization. There was a story today about Deutsche Bank, creating a SWIFT-like experiment around trading and settlement. We saw DTCC last week by a company called Securency.
Did we just go over that? Yeah, it was a big deal to Jack, too.
Thinking about how traditional capital markets, if you just think about DTCC and what they're doing here in the U.S., that walled garden, but trying to transform what they have with an eye towards the future around tokenization. So that train has long left the station. The question is going to be how quickly it really has a material impact and what that's going to look like. But that's a theme that we're very committed to through our Atomic Net product. What I love about it is the TAM, or total addressable market, is so much bigger than anything we see in crypto, because it really can potentially encompass all assets, and that exchange of wealth in a digital format is really quite staggering and exciting.
And this is where you know Ray Fuentes has got the goods. He doesn't let Jack off the hook when he brings up total addressable market. He says, why don't you quantify it for us and let us know how big that market is for you, Jack?
Very exciting. If you were to quantify it and see those numbers, that's what really gets the mind.
You're talking in the tens of trillions of dollars. You know, studies have. There was a study, I think 21.co, came out a week or two ago, talking about $10 trillion industry by 2030, if I remember correctly. And McKinsey's come out with recent reports around it. So these are legitimate organizations who have done a lot of work on it, who see the promise there as well.
No doubt about it. And shout out to Ray for not letting that one sit out there. You went and got that number, Ray. That's right. And then here's Toko talking about what's going on with the total addressable market, real world assets. And he gives you numbers from the World Economic Forum, and they're even bigger. Take a listen.
Why is this all so important? And I think this slide neatly sums it up. There is so much excitement about crypto and NFTs and DeFi. And I am also share with that excitement. It's been fascinating to watch the rise of this brand new technology and the associated asset class. I didn't check this morning, but it's somewhere in the region of $1 trillion is the current value of the crypto markets. And at its peak, it jumped over $3 trillion before we had a little crypto winter that we're currently going through. But we are talking $1 to $3 trillion is the total value of crypto assets. Now, the World Economic Forum, Davos, they've estimated that by 2027, which is actually not that far away, we're going to see at least $24 trillion worth of assets on a blockchain. They will be asset-backed tokens. And that itself is just the tip of the iceberg. If you start looking at real-world asset classes, real estate is already $310 trillion. Global debt, so debt instruments, the types of things I referenced earlier, mortgages, which is just a simple example of a debt, $220 trillion. Global equities is running at just over $100 trillion. And there are many other asset classes that we don't even necessarily think of as an asset class because they aren't currently serviced by the financial services market. So I think what we're seeing here is the potential for $500 to $700 trillion worth of assets that are going to be moving on chain over the course of the next decade or so. Now let's just compare that to the $1 trillion worth of crypto today. That technology applied to the tokenization of everything is where Toko's positioned itself to do high value, complex tokenization.
There you have it. Yeah, like I said, I'll take some profits in the next bull run, but I want the next bull cycle, the next bull market, right? We've been in a crypto winter, and the real projects that provide real use case utility have been building and building and head down and building. And that's what I'm excited for. And it's all coming over the next couple of years, apparently. And I couldn't be more excited. And look at these numbers here from Masari. Following the landmark verdict confirming that XRP is not a security, XRP ended Q3 with its market cap up almost 60% year to date. XRP Ledger's decentralized exchange volume also increased nearly 400%. XRP Ledger aims to end the year strong with new developments including hooks. Let's take a look at this. Including hooks and AMM, automated market makers, and clawback amendments. Things are moving in a great direction, ladies and gentlemen. And speaking of moving in a great direction, let's talk at Crypto Insight UK. Let's hear what Will's got to say about potential for this price movement and where we could be going in the very near term here.
Using that same maths, you would give us about a $1.35 XRP price. The previous Bitcoin spike, Bitcoin moved up 19%. About 23 days later, XRP moved up 100%. So far on this move, Bitcoin has moved up around 30%. So using that same maths, you would give us about a $1.35 XRP price. 55 to 59 cent is a real big resistance. It's a very reactionary level, and we're just fringing on trying to clear that. When we get a good clean break of that area is when we see explosive price movement, either to the upside or the downside for XRP.
And there you have it. Shout out to Will for that one. And you know what? We are above it at the moment, but we got to get clear and away above it, like he said. And that's what we're going to do. I love it. Look, if you haven't done it, join us in the Freedom Zone, where we're going to talk about the network effects. Define what network effects are and what it really means for XRP, the ledger, and the US dollar, and so much more. Make sure you join us in there. And also, don't miss the opportunity to join us. Dig Perspectives. You can click the link underneath the video or go to digperspectives.com. Join the Freedom Zone. Or watch out for later this week. I will be going live with Digital Asset Investor, who has really spurred us to create these groups because of the censorship that is so very real and unwarranted on the social media platforms. This is a way for all of us to stay connected for the cost less than a cup of coffee per month. We can make sure that we have the real conversations we've been looking to have with you for years, and we're going to do it this week. Make sure you click the link and join us. I'll catch all of you on the next one.